Good morning, traders. It is Thursday, the 6th of August, 2015, 8:03 a.m. Chicago time. Sorry about the delay. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Not much in the way of chatter or news overnight. European equities are lower, led by energy stocks. Greek stocks moved higher for the first time since the reopening. Asian equity markets were mixed. Earlier in the session, Japan outperformed amid ongoing weakness in the Japanese yen. US dollar, Japanese yen paired testing multi-week highs of 125. The S&P ASX was softer as the weakness of commodities continues. This affects Australia. Gold and oil are lower. The US dollar is lower versus the pound, lower versus the yen, and higher versus the euro. The pound is at its strongest level against the euro since 2007. Came in at negative 4.4 million versus negative 1.5 million expected. Yet crude oil jumped up during the release. It was at 46.50 or so. It jumped up and then it ended up selling off to a low of 44.83. What looked like an impulsive move down. Expecting crude oil, I did expect crude oil to continue lower. The auction was incomplete, and it got a low overnight of 44.51, seeing very little in the way of support there. The support for that product is likely to be fundamental in nature, in other words, the supply change. This morning, the Bank of England voted 8-1 to leave interest rates unchanged at 0.5%, more dovish than expected. Carney's been releasing comments about the future of interest rate hikes, basically stating that this is a reality that's going to come to fruition soon. And then this morning at 7:30, about a half hour ago, we got initial jobless claims, 270,000 versus 272,000 expected, slightly better. Continuing claims came in at 2.255 versus 2.25. A lot of the regions providing the input for the initial claims data are providing estimates as opposed to actual numbers. Looking ahead at what we've got today, we don't have much at all on deck. We have natural gas storage change, expecting 43 billion cubic feet at 9:30 Central, 10:30 Eastern. And as far as earnings, not much, not looking for anything after the close, nothing major. If you're keeping an eye on tech stocks, Tesla is taking a hit after releasing its earnings yesterday. I think it's down somewhere around 6 or 8%. Let's switch gears and look at what we've got on the technical end. So let me scroll down here and look at what I wrote for hypothesis 1 based on yesterday's trader bite. Hypothesis 1 was open in range to chop around in an open auction in range. Actually, nope, that's not correct. That was 2 days ago. The primary hypothesis, if you recall, was the expectation was for it to open in a gap, and the primary hypothesis was for it to try to push lower into the 96 and then down into the 91 area, 91 being the MCV POC, and then expected to chop and then push higher. That did not work out at all. Hypo 2, though, worked out exactly as expected. Hypo 2 was expected to push up to 2103.75. That's about right there. We expected an open auction. We expected it to push up through the overnight high and then become responsive and then move down into the 2091. And I'll show you again where that 2091 came from. The 2091 being this price here, it managed to push through by a couple of ticks on the low. Hypo 2 worked out perfectly yesterday, and then the market went into balance. We have a double distribution profile. The market liked prices up high and was trading up here at 2104.50 or so as the most accepted price until the impulsive move down, and later you could see the point of control shifted right here down to the low. Both distributions look fairly well auctioned. The high was not so great yesterday. The high seemed kind of weak, but we did push through the IB here, this yellow line, by 2 ticks before failing back down, and then we had this impulsive move in a continuation, or on a higher time frame, impulsive pullback. This is a great setup right here, and then continuation down into our main target at 2091. If you recall yesterday, the 2091 came from the balance that was that existed up here. So let's have a look at what we've done. So if we take the last 2 days of trading, these last 2 balance days here, our key areas were 2091 right here. The initial support is around the 2093.50. 2093.50 coincides with the composite high volume node here. You can see how the market peaked out right there, drops, peaks out again, drops, and then and so on. That area here is 2093.75. We happen to close right at it, but this is the primary, the first support expected yesterday, and then the key target was the MCV block at 2091. We pushed through it by 1 tick right there. That worked out pretty much perfectly. We don't expect it to work out that way. I'm not tooting my own horn or anything. I didn't do this work. I'm just reading it. But overall, I still believe that this 2080 is a weak structure below, and I do expect this market to rotate down and take that out and push through to potentially 2066. Caveat right now, tomorrow is non-farm payrolls. The last non-farm payroll high is right here at 2079. That was about a month ago, and we're coming into tomorrow, Friday, at 7:30 Central, 8:30 Eastern. We're going to get the non-farm payroll release. Again, this is the second most important release of the month after the FOMC, and the market's a little bit higher, but not that high. We're only about 15 points up since the last time we were here last month, but this makes for the non-farm high from last month makes for a great confluence with the low that we left behind from Monday. So even though we gapped up, we still have a gap. So yesterday we opened right there. The prior day we closed right here. We still have this closing gap. We've closed the range gap already, but the closing price gap is still open, and I see reasons for this to continue to rotate lower. To be honest with you, I believe that this is likely to continue to test lower. The overnight high is 2099 quarter, 2091 is the overnight low, completely inside of yesterday's range on the overnight session. Despite all the movement, most of the overnight session was spent sitting between 2096 and 2091, 2092 until the break higher right here. This coincides with the Bank of England. I couldn't find anything else other than the Bank of England release. I'm sure something else is driving this because the Bank of England release was not that dovish. In any case, the market has, the ES has moved up after a pretty bulky session sitting right in that range that I mentioned, 2096 to 2092, and it broke out, and now it's sitting sideways. Overall, the overnight inventory is balanced. We did not accomplish anything overnight. The point of control overnight is in line with yesterday's point of control. We are at yesterday's close. Yesterday's close is this orange line. Right here it says YCL, yesterday's close. So overall the inventory is flat. Delta is flat on the overnight session. So what does that lead to? Sorry, I've been losing my voice all week. What does that lead to? It is likely to lead to a very, very choppy open. So in looking at how this might open and what this might look like, the expectation is for it to chop around in here. Primary hypo, any push higher is likely to be confronted by sellers. I expect it to top out and then start moving lower to retest this balance zone. And the expectation is for it to try to push through and down to the 8250 again. If we're lucky, it'll take out this 2080 and give us pretty decent volatility for some greater opportunities. But who knows? But the primary hypothesis is that sellers are likely to step in and keep this in line and keep a lid on this. That's the primary hypo. The second hypo is open chop as usual, and then we test the overnight low, find our buyers, and then start to push out of that 2-day range and back into the thinner part of yesterday, targeting this high volume node and then starting to make its way back to that 211250 as the primary target up top, right? We've talked about that for several days. This is an unlikely scenario. Again, this is the Thursday before NFP. We expect some shifting to happen on the close. Pay attention to the close today. We expect some squaring up, some hedging. I would not fade the closing trade, the closing trend today. But overall, I expect that we're not going to see too much action today. But again, the primary hypo is to try higher and then to ultimately fail lower, get to 86.75, but mainly target this 82.50 down below and close this gap as well. If we're lucky, as I said, we would take out the 80 and get down into 79.25, and then we basically will be at tomorrow's NFP against the high of last month's non-farm payroll release. Anyway, I'm losing my voice. I was going to go over crude oil this morning, but I'm running out of time here. But overall, crude oil has continued its impulsive move down. Has generated another impulsive move down right here. You can see it pushing the high and then pulling down on a pretty decent drop from 49 to 45, and then with a small pullback, and now it's done its push down, and it looks like it's targeting the lows we had earlier this year. So overall, the immediate target is this gap zone at 44.13. I do not see it getting much support underneath here for the time being. I believe the trend for this product continues to be lower. As you can see, it's just not able to find support. It's just completely free falling. Nobody's cutting supplies. As prices of crude drop, a lot of these countries have a massive incentive. They're not going to exercise discipline. They have a massive incentive to produce more, to make more crude oil, to make up for the budget hole that this is causing for these governments, and probably unrest to follow. So as they produce more, prices continue to tumble lower, and there's just, OPEC is not as disciplined as we'd like to think, but it is what it is. In any case, here it is starting to tackle the low that it put in for the session right here, and again, I expect crude oil to push to 44.13. I'm out of time. I'll leave you with that. Don't forget, if you haven't caught it yet, the trade wisdom from released earlier this week on success in trading. I've tweeted it out quite a bit, and it continues to be tweeted. I believe there are some key things you need to know as a trader, and I just want to make sure you know the reality of coming to be a trader. This is truly a challenging job, but like all high performance jobs, it requires some high level of discipline and grit and other things that I talk about in that video. Good luck today, and I'll catch you tomorrow.